the markets have seen the bulls make a big comeback on the street. The market has clocked gains of over 2% in the week gone by, and that's the biggest weekly gain in 6 months. 40 out of the 50 Nifty stocks have given positive returns this week. On this week's edition of Editors Roundtable, we will decode the week's action on the street, and we'll also put the spotlight on the RBI's monetary policy announcement and tell you what that meant for the market. And of course, lots of buzz around the fundraising that's going on, block trades as always, as well as QIPs. Not just all this, we talk about some of the key cues as we look ahead, winding down 2024 and then looking forward into 2025. I'm Surbhi Upadhyay, and you are with us on Editors Roundtable. With me, as always, Nigel D'Souza, Nimesh, and today we have Nilesh joining in as well to talk about the markets and, maybe a little bit of reflection looking at the year closing out.
No, I think it's been a great year so far. I mean, I think a lot at the start of the year, the expectations were very different, but India still has turned out to be a great market which has been outperforming, barring, of course, the last quarter. But otherwise, I think most part of the year has been very fantastic and totally robust. So I think it's been a great year.
But Nilesh, we should thank you. And on a special day, 25 years for CNBC, you've been with us for almost 22 years now. I think your first interview in CNBC was in 2003, if I'm not wrong. I joined in 2005, but I know you've said this. You're one of the fondest memories and the whole journey that we've seen in the last 20 years of this capital market evolution.
No, it's been an incredible journey, Nimesh. I think from the days when CNBC started off to where CNBC is today, I think it's mind-blowing. Honestly, none of us could at that point of time comprehend or even envisage or envision that CNBC could actually be where it is today. So it's simply amazing. And the kind of changes you guys have brought about, the improvements and the kind of knowledge sharing which has happened, I think it's been great. And it's great to be part of this journey. So awesome 25 years. And wish you, again, an amazing and incredible 25 years ahead.
Okay, let me ask you one thing before we start to talk, bread and butter markets. If you were to give us one tip for the next 25, or the one ask, or the one thing that you would want to see, done differently, or something new, what would that be?
Honestly, hard to think of one thing that you can do differently, because you guys actually do things in such a comprehensive manner.
Fantastic. Okay? Thank you for that.
I think it's, for me, the most enriching part of it is to essentially get views from managements. That I think is fantastic. To me, that's the biggest value addition. I attend a lot of earnings calls, but the kind of interaction that you guys do with managements, and at times you guys really hold them against the wall, saying, when management say, yeah, we'll do well, but I think when the immediate rebut to that is, how much well?
Why are you confident?
I think that's amazing. Okay, so that's so I honestly think just keep doing more of the same.
Thank you so much.
Nilesh, you made my day, because I always think sometimes the management goes on that con call, they meet analysts as well. So, what I strive in all my interviews is to give that little more, thoda aur de, try to get something. And I love it when it's before the con call, because then we do a good interview and sometimes you hear the analysts referring to your interview. Makes my day,
And Nigel, it is not thoda aur. Actually, that thoda aur is a lot aur. So
absolutely.
Honestly, that makes the difference. That's honestly, that thoda aur makes a lot of difference.
Absolutely.
Thank you. Okay, so now on that note, as I said, we have to come back to bread and butter as well. So I thought I'll quickly just recap the week gone by. It's been a great week, actually. Don't go by just a slightly quiet Friday and lackluster response to the RBI policy, because the bulls were doing the heavy lifting actually at the start itself. So for the week as a whole, the Nifty is up about 2.3%. The Bank Nifty is up almost 3%. The mid-cap index is up 4%, and the small-cap index is up 4.3%. Short point, the bulls have bounced back in a very good way, and the market has taken out a lot of important levels as well. The Bank Nifty is trading above all of the moving averages. Anyway, it's only 1.5% away from the all-time high. But even the Nifty, it's clawing its way back. And finally, it's on Friday, actually, on an intraday basis, it went above the 100-day moving average as well, roughly that zone of around 24,700. So there's momentum coming back after a long time in the market. And what's powering it? The color of money. It's very, very simple. It is FPI selling that took us down, and the fact that some of it is now abating is taking us higher. And the number's looking good, by the way. So for December so far, which is just a couple of trading sessions, we are already positive by about 15,000 crores in terms of the net FPI buying that's come through. And these are final figures from the depositories. So whether you say the money's come in a QIP or it's come in the secondary market or a block, the fact is there's money coming in and buying Indian equity. So you sort of take that with both hands. Contrast this with the selling in November. Obviously, we were down 21,000 crores in November. We were down 94,000 crores in October. So this is good. Now, the bulls will want to see from here on that this sustains. December usually has been very, very positive for the Indian market. 7 out of 10 times, December has ended on a positive note, and the bulls will want that pattern to continue. So what are we looking at as we look at the next 3 weeks of the month as well? Obviously, the jobs report and how the US market is behaving. This week saw the divergence between India and US come down because Indian markets started outperforming, and the bulls will want to hope that we see more of that. And don't leave your eye off China, I would say, because there's some murmur and chatter that next week the Chinese policymakers and the government officials, they're again coming together for a big mega economic symposium. Again, they'll take stock of whether they need more stimulus or not. So China, as always, is going to be in focus. Some of the metal stocks were up on Friday as well, so we'll watch for that. But largely, a pretty good week.
Well, that's right. It was a good weekend. Since you mentioned the RBI policy, just want to take viewers through, the broad highlights of the RBI policy meet. They left the repo rate unchanged, which was on expected lines. The CRR cut, that was the chorus that we heard all through the week, and they went ahead and they obliged, right? The 50 basis points cut is what we got, and because of that, you'll have more than 1 lakh crore of liquidity that gets released into the system. They though highlighted in the near term there could be some upside risk on inflation, and that's why they couldn't go ahead with the repo cut. However, early 2025 is when, the expectation is that they could possibly see a repo cut as well. On growth, on expected lines, mathematically, it wasn't possible to go ahead with that target that they laid out for the GDP target. So they've skimmed it down, which is okay. And on the inflation front, they perked it up a little bit. But the important point they made is that growth has bottomed out in Q3. And by Q4, they're expecting inflation to peak out as well. So they're saying in the middle of the next fiscal, they're on course to hit that 4% of the inflation target. The commentary as well was a little bit cautious with regard to global uncertainties with regard to inflation, but that's just in the near term. On ground, they say the high frequency indicators indicate that Q3, we saw bottoming out. We're seeing increased consumption, particularly during the festive season, and also that capex push is having some result on ground. That's what the high frequency indicators did show up. Government consumption is improving. Investment activity as well was expected to improve. How does it impact? Well, it impacts the banks because they'll have a high amount of liquidity. So it helps their NIMs marginally. Citi had put out a note and they said a few of those banking names will gain a little bit more than the others. But on the whole, those that have lower NIMs, they'll benefit by around 2 to around 5 basis points. So par for the course with regard to that CRR cut, and they've not moved the needle on repo, I think, on an anticipated lines.
Okay, Nilesh,
your view, huh? Yeah. Exactly. So what's your view on the financials?
I think the stage is set. I think banks have underperformed. The large banks have underperformed. Probably the markets were in search for some kind of a trigger. The Reserve Bank of India has provided that trigger today in terms of a CRR cut. This will start manifesting in terms of the performance of banks for the next, maybe over the next 2 or 3 quarters. And then after that, if we do get back onto a sustain even the current 6.5% growth levels and get on to a 7% growth levels plus added liquidity and then rate cuts sometime in 25, CY25 seems to be a promising year for the large banks.
So, Nilesh, if I want to ask you, as an investor, within the financials, where will you focus on? Banks has got its own triggers, NBFCs will have its own triggers, and MFIs, which have been sharply down. A lot of people believe that even Q3 would be weak, but it's in the price now. So from an investor point of view, where you will bet on? Will you buy MFIs or NBFCs or private banks?
See, I would still think that the best place to be is the fintech space.
Yeah.
Okay.
Within the overall, I mean, if you look at financials, obviously those businesses are different from a conventional bank. But I still believe that it's going to be the fintechs who will keep powering ahead. Sure. The payment companies, the insurance distribution companies, the online investment or broking platforms. These are some of the places which will still continue to be probably the outperformers for a very, very long period of time. These are businesses which I think will comfortably grow at 20, 25, 30%, despite the fact that there's enough competitive pressures and some of the other headwinds that they could face. But I still think that's the best place to be. Sure. Things like MFI, large banks, they're going to be more about just bouncing back or catching up with some bit of the outperformance.
Yeah.
On financials, since you mentioned this insurance, that's also been one huge story this week again, right? Because there's never a dull moment in insurance, and now the chatter is about some relief on GST for health insurance and term insurance. But that whole nervousness around whether the bank assurance channel will be tightened or not, whether beyond LIC now the agents can go and sell multiple policies, just too much regulatory haze around the pack.
Yeah, so the pure insurers will always be subjected to and maybe a bit vulnerable to regulatory changes. Whether it's allowing an insurance company to do multiple insurance products, whether allowing FDI, whether capping what banks can sell, how much they can sell. These are some of the risks that they face. But I think if you were to kind of look at pure distribution companies in insurance, I clearly believe that's the place to be.
That's fintech, distribution, financials, all coming together. I think we know which stock he's talking about.
Nilesh, you spoke about digital companies, but you're also bullish on the platform businesses, Zomato, Swiggy, a lot of other platform businesses. We saw one accident in one of the platform businesses where you are a holder as well. See Infosystem, MapMind, it's a unique company, so to speak. What went wrong? What is your assessment on why that move of getting into some other business and putting companies' cash into works?
Yeah, I mean that's honestly not the best of things. It's honestly unfortunate. What has happened. That's totally unfortunate. But at times, some of these very ambitious managements, at times, basically, they do end up doing some things which probably are not in the best interest of minority shareholders. And that could always get misinterpreted as lack of governance or misgovernance. But I think I still think it probably is the best deep tech story India has. It's honestly a crown in the jewel. I mean, there are rare to see businesses which can take on the mighty global digital monopolies, and this is one kind of really a showcase which India has to the world. So I still think the business has tremendous promise. It's just that this one action has, at least for the time being, pretty much dampened spirits in this. So let's see how it unfolds. It won't have any implications. It won't have material implications in terms of the business, the operational performance, the financial performance. It probably might just get a bit better also. But I still think this was something which probably ought not to have done.
Okay. The other hallmark of the week obviously has been this continuing surge in blocks and QIPs and hectic fundraising activity. Nimesh, so I mean, even as the year ends, I think the iBankers are not resting, right?
They're definitely not, and it's a good time, a sweet spot for them, right? I mean, so much of craze is there, IPOs, QIPs, block deals. Just guess the number in the last 4 weeks since the Q2 earnings got over till now. How much is the money been raised by QIP and blocks put together? Nilesh, a wild guess.
No, I honestly don't know.
The number is 40,000 crores.
There you go.
Let me just go to the wall and explain as to what the activity has been like. As I said, it's been a big week, a big month, so to speak, as far as fundraising via QIP and block deals are concerned. The big number to start with, put together cumulatively between QIPs and block deals, companies' Ps have raised close to 40,000 crores. That is close to $4.7 billion. Yes, the number is right. $4.7 billion raised in just last 1 month via QIP and block deals. I'll run through the QIP data first because that's where the large amount of money has been raised. From QIPs, the companies have raised close to 30,000 crores, and in block deals, the remaining 9,500 crores. And that's the amount of money been raised in the last 4 weeks itself. Now, running through the QIP list, which has been the larger one, so to speak, Zomato was one big QIP which was raised. The company raised close to 8,500 crores. $1 billion got raised by Zomato itself. KEI Industries was another big name. They raised 2,000 crores. Within the mid-sized companies, Godrej Properties raised 6,500 crores via QIP. Torrent Power just closed the QIP last week and they've raised close to 3,500 crores. And Bharat Forge this week raised 1,500 crores via QIP issue. The smaller names, again, PG Electroplus is one name. It was well bid by large institutions. That managed to raise 1,500 crores via QIP. And Varun Beverages was another big company where they've raised 7,500 crores. So that's the kind of money being raised only via the QIP issue. So that's the list, almost 30,000 crores raised via QIP. Now coming to the block deal data, every day since the earnings season got over, we've seen 1 or 2 blocks getting done. And I'll just run through some larger names where the the large exists. The first big name was PNB Housing. PE investors sold 9.5% stake and they raised 2,300 crores in a single day via block deal. Cipla was another large block. Promoters raised 2,000 crores by just selling 1.7% stake. That happened last week. ZF Commercial, again, the global parent Wapco, they sold another 5.7% stake and raised 1,400 crores. This week we saw TBO Tech, they raised, PE investors sold 6%, they raised close to 950 crores. Then the smaller ones like Home First Finance, Indegene, 700, 800 crores kind of fundraising. Metros was another large block where the PE sold nearly 6.5% stake and they raised close to 550 crores. And the last but not the least, this week we saw Zentech promoter selling close to 2.5% and they're raising close to 400 crores. So the 10,000 crores is the amount raised via block deals, but the larger amount came in from the QIP issuances of more than 30,000 crores. So that's the kind of money which has been raised only in the last 4 weeks, $4.7 billion, which is equivalent to 40,000 crores. Nilesh, your take, have you been participating in any of those blocks or any of those QIPs?
No, not really. I mean, honestly, most of our businesses don't need capital. That's the kind of businesses that we invest in. Barring one of them very recently, Zomato, which raised the money. But that probably was for different requirements. I don't think for them it was a need of money.
More for the FI cap.
Exactly.
Yeah.
So honestly, no real participation. But I think this augurs well, right? I think it just strengthens the balance sheets of these companies, especially the QIP part of it. And it's good that no longer promoter selling is perceived to be a negative. So I think on the whole, this augurs well.
You know, one of the companies that Nilesh pointed out was Zomato, and that was one of the biggest sort of fundraisers that we've had in recent times. And since you look at, fintech, consumer tech very, very closely, Swiggy also came out with numbers. That was the other big story of the week. And, the market's been sort of a little more charitable to Swiggy since its listing. What do you feel about this space? Food delivery on one side, quick commerce where Amazon is also coming. So how do you find these two listed players?
No, I think the space is super interesting. I mean, undoubtedly, it's hard to come across businesses which you probably think can grow at a 30 to 40% CAGR for a very long and extended period of time. So I think clearly what the street is right now saying is, don't bother about who's going to be number one, who's going to be number two, who's going to be number three. Just own the space. Don't really kind of try and figure out, who's going to be that eventual winner or whatever it is. For now, have enough exposure to the space. And so might as well own whatever is available. I think that seems to be essentially the mood right now.
Okay, all right. Well, we do have to take a very quick break on that note. Coming up on the other side, some of the key themes to watch out for in 2025.